Welcome to Trade of the Week Monday. So every Sunday, the users of StatsEdge Pro get access to all of the swing trading setups that we're going to have potentially for this week, broken down by all the different algorithms they come from. For Monday, I usually take something that has triggered so far and give that to you guys. This week, nothing's triggered, so we're going to go through one that I think is kind of interesting, potentially could trigger in the future. So again, if you want access to all of these, you want to be alerted in real time when they trigger, have them the weekend before so you can do your own research, which I very much always recommend people do. Do your own research, kind of study which of these you like and why and how it fits in your trading and portfolio. Make sure you go to statsedgetrading.com. Link should be down below somewhere, but again, statsedgetrading.com, you can give that a shot. It's been really, really good this in the last little bit, ever since the market stopped crashing. Things have been phenomenal for us. So now, taking a look here at what I'm watching is this FMCC. This is Freddie Mac. It's interesting history with Freddie Mac, and this is, was worth $60, and this was 2008. Kind of completely fell apart, almost went bankrupt. The government took it private, and then it's just been doing nothing for many, many years. And now it looks like it's breaking out. We've got some activist investors with Ackman, and then we have Trump talking about it. So a lot of things cause this potential move. So that's one thing, that when we're trading, we are generally only trading strong names in some respect, either short-term strength or long-term strength. We're generally not buying dips or buying mean reversion on junk out there. It's just not something that really does super well for us or anyone, I would argue, in the long run. This is one that's very interesting because what we're looking for is a pullback here after a big gap higher. So we had a big gap higher yesterday, and now it looks, or a couple days ago, and now we're looking for a pullback into this range. So the system picks many, right? Sometimes up to like 30 or 40 potential names that we could potentially trade. I then like to go through them by eye, and I like to use some basic technical analysis. So what's the reason that I like this one if we can pull back to about $7 as opposed to a lot of them? Well, first of all, you can see this was a clean area of resistance. So we've come up to $7 a few times. So if we fail here and start to push lower, it just shows us that yes, there is potential buyers that are going to protect that $7 area. Also, shorts, right? So if you were short at $7 and then it gaps up to 8, well, if it comes back to 7, maybe you're like, you know what, I'm going to take some off. I was wrong about the trade. I went big percentage move against me. So if I can get back to even, I'll defend that area by buying. That's what potentially happens at these support resistant flips that a lot of technicians like myself like to look at. And then the other thing is the gap. You're into the gap right here. And then if you pull back to the 7, again, this has to happen sometime this week, then you're essentially just coming back into this gap area. I believe this was a Trump tweet that caused this particular gap, but you're just coming back into the gap just a little bit, maybe catching some moving averages that catch up. And again, that horizontal price action. And then how are we trading this? Well, we have a stop on it, a long-term stop, and that, or a kind of hard stop at around the $5 area. So right here. So it's on a percentage basis is wide, but we keep really wide stops because they rarely trigger. What we use is called time stops. And what we're doing here when it comes to this time stop is we're essentially saying this is a week-long trade. We've done a lot of testing. Everything I've done has thousands of trades and goes back 25 to 30 years. And I find that on average, about a week to maybe 2 weeks of holding time is the best for this particular setup. Because we're not looking for this thing to, go to $1 million. We're trying to buy a pullback and get a short-term little bit of a bounce. If we can get it from 7 to 8 or 7 to 750, that's a great little percentage gain for a 1 week hold. And then we take that capital and we roll that inflated now capital into the next trade. And that's how you compound gains over time. So that's the idea behind it. We have that protective stop just in case things fall apart. We don't want to be holding this thing if it goes to 0, right? So we have a protective stop in there. But the idea is that we are looking for a little bit of pullback to around, again, this little under $7. So I think the exact price is 669. Nice. If it pulls back into that and it holds that area, and then we get a bounce from there, again, this time next week, come Monday, we'll be out of this position. So Again, if you find value in me walking through these trades and everything, certainly let me know. If you want more of these setups, again, tons every week. We have day trading now. I'm working on some more momentum driven setups as well. Make sure you come on over to statsedgetrading.com. And until next time, I will talk to you later.